Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype finance channel that is mission-focused on finding you exceptional companies and unrivaled investments. This is Unrivaled Investing that you're watching. Today, we're talking about Yalla Group. I got to give you a little teaser before actually jumping in. They're a new IPO. They were neglected. They came in below the price that they initially indicated. They're a social media company, so they benefit from network effects. They're a hyper growth company. They are growing way faster than the behemoths like Snap and Facebook. They're also significantly more profitable. They have profit margins of nearly 50%. So, and their valuation is around 20 times this year's free cash flow, net of cash. So this has all the markers, like seeing hyper growth that is literally multiples of some of the biggest, social media companies out there, extremely profitable, even more profitable than Facebook, and at their peak profit margins, like and seeing a relatively low or affordable multiple of 20 times net of cash despite growing super duper fast this year. Like, this has all the setup of a multi-bagger, in my opinion. So there's enough to warrant a look. So what's going to be the structure of this video? We are going to first, what is Yalla Group? That's what we're going to talk about. What are we going to talk about? What is Yalla Group? The ticker is YALA. What's their business model? What do they do? What's the opportunity? Does this have 10x potential? Every company I look at, I'm looking for big game, baby. I want things that I can own for years or even decades at a time that can go up hundreds or even thousands of percent. And so it needs to have that type of 10x potential. Also, does it have an unrivaled value proposition? Do you offer something that no one else offers? Because if you're unrivaled, it means no one else has a good or a service that compares to you. That means you have the right to win. You're going to dominate your market over time. Lastly, I have a free investment calculator at the end for my loyal YouTube subscribers that make it to there. But before digging in, if you want to learn about potential multi-baggers like Yalla Group, make sure you subscribe. If you're already a subscriber, I really appreciate a like on the video. Also, if you want to know what I'm personally investing in, you can go to unrivaledinvesting.com, click on Journey to follow my personal journey as I try to find these multi-baggers. And also, I love it when you post at the end of the video saying, hey, Daniel, learned a lot. Can you take a look at this company? Because oftentimes that's where I get my leads for looking at the next idea. I want to know what you're thinking about. What's the potential next multi-bagger? Does it have an unrivaled value proposition? You tell me why in the comments below, and I will add it to the list. Let's dig in. So first, what is Yalla? It's a word that, or a phrase that has meaning in the Middle East to mean like, hurry up, yalla, yalla, get your butt over here. But their business is that they claim to be the largest voice-centric social networking and entertainment platform in MENA, or Middle East, North Africa. And honestly, it's kind of weird to sort of preface their business description that way, like the largest voice-centric social networking and entertainment platform. It just seems weird. Maybe we'll get more into that in a little bit. So what are their main apps? Like what actually makes Yalla special? Like, how come they're growing so fast? All sorts of questions. So first of all, Yalla is primarily two separate apps that's localized primarily for MENA, the Middle East, North Africa. So you have Yalla, Yalla, Yalla. I always want to say that when I'm reading this, which is voice chat rooms, online community, games. Effectively, it's a cyber cafe for people to meet others, to talk with existing friends, to see interest groups. And it's all based on this voice where there's a limit of how many people can be in a given room, up to like 10 folks. So that way, when you talk, like you see who's the person that's talking. It's free, it's easy accessible. And the people that use it seem to love it, where active users spend something like 4.5 hours in their live chat rooms on a daily basis. It's pretty incredible. Like, over half your working day or over half your free time spending in one of these rooms. I mean, it makes me wonder if it's just something that you have going on in the background that you use, and like, oh, Amir just joined. Let me talk to him. What's going on, my man? That sort of, process, and maybe you have particular groups like, hey, this is the stock market group where we all talk about what's going on the Dubai Stock Exchange or something like that. And they also have a much faster growing app. So that's Yalla. The ticker is YALA, but the app is YALLA. And so their much faster growing app is Yalla Ludo, which is a board game platform for Ludo as well as dominoes. Ludo is the game that's on top, and dominoes is the game on bottom in this picture here. And there's somewhat of a betting aspect to this, as you can spend, or you need to spend, virtual currencies in order to start a game with your friends, and the winner of the game gets to keep all the virtual currencies of whoever like entered the game. So they get to keep it, and then they can cash it in on virtual prizes and things like that. And you have your scoreboard, but otherwise, don't get sidetracked here. The virtual currencies, potential virtual gifts, they aren't monetized for users. Like there's no, virtual to dollar or virtual to respective hard currency conversion. It's once you're in. It's part of this ecosystem. They're not trying to figure out a way of gamesmanship. So I've talked about like what's attracting people to it, and this is it. This is like, it's Yalla and Yalla Ludo. That's the drivers of this business, which is pretty interesting. And the cool part is that like when you're playing this game or when you're playing dominoes with someone, first of all, there's a matching aspect so they can connect you with someone, but also like you can talk to them like, bugger, you played this move, I wasn't expecting it. So that, you can start meeting people. Honestly, some of this seems like the internet of like over a decade ago. And it doesn't really strike me as like breathtaking, like, holy moly, this is the cutting edge future technology that's going to, drive the world forward. This sort of seems like taking an old concept, and just applying it to Middle East and North Africa and growing it. I mean, maybe next they'll have a farming game or shoot the zombies game. Like it doesn't like none of this was like jaw dropping. Like, wow, this is truly incredible. But it's interesting that this is, it just IPO'd and it's a fast growing company and it's extremely profitable. So it's got a lot of things that I am interested in. So let's keep going. Like, how do they actually make revenue? Because nothing I've talked about, like these are both free apps. How do they monetize these apps? And the answer is two ways primarily, which is virtual items or virtual gifts, where it's like, hey, you meet someone in the room, you instantly like can throw some gold their way, some fake gold or some, candy or cupcakes or something. Be like, oh, I love that comment, I love that take. Boom, you send some, to some people. Then there's also like upgrades where you have like a VIP rights or a premium membership. Like when you enter the room, it makes you stand out. Like one of the things they called out in their filing was like you can have it so that there's like special effects happen when you enter the room, or that you show up in like a fancy luxury car. It's your fancy digital luxury car. Oh, this guy Daniel's just entered the room in his fancy schmancy Highlander, something like that. Gold star for you. You're so special. And that's what people are willing to pay the big bucks for. And what do their financials look like for getting these digital gold stars? Like, wow, these financials look very nice. Like, this is a company that is growing ridiculously fast and is incredibly profitable. Like, look, it's gone from 42 million in revenue to 63 million in 2019. And then in the first half of 2020, they did 53 million in revenue. And so they're on pace to easily, which is 100%, pretty much 100% growth year over year for the first half. Like, and their profit margins, are 45 to 50% in any given period. So this is like extremely interesting. And, you see the cost of revenues is teeny tiny relative to the actual revenues. And you think about like, well, what do you actually have to spend money on with these apps? Like, you got your servers, you got like any sort of credit card charges, so the commissions on that, maybe some advertising expenses, like so that way people find out about your apps. Oh, you got to pay a cut of your revenue to whoever you're on the platform with. Okay, so that makes sense, of the Apple and Googles of the world. So that, that's where the cost of revenues is. So that makes sense. Selling and marketing expense, like their tech expense is pretty minimal. It looks like it's on pay. Their tech and product development, you're talking is probably going to be around $4 million this year for a company that is generating, on path 50 million in profits this year, which is pretty incredible. But what about user growth? And clearly, like when we're looking at this, they probably did get a nice bump from COVID, given that in 2019 they grew 50%, and in the first half of 2020 they grew by 47% alone. So nearly equal to all of 2019. So there's clearly a COVID bump that's going to need to be factored into whatever analysis you do. But what about user growth? Like what's actually driving this business long term? And like, wow, their user growth, I have the figures here at the bottom. Their user growth is actually pretty darn good. And you can see they have average monthly active users. Then they have paying users, and this both are in thousands. And then you have the average revenue per user in US dollars, which is kind of interesting to see. Like, first of all, their Yalla app is their main app, and it's gone from 2 million to 2 million in September 2018 to 3.3 million by 2019 to nearly 5 million in the first half 2020. So it is definitely getting some scale. Yalla Ludo has gone exponential, where in 2018 it pretty much wasn't even around, and now it has, at the end of June, it had nearly 8 million. So that's kind of interesting to see. And but as you always need to sort of parse through these figures to actually understand what's really driving things here. Is that even though Yalla Ludo is growing real fast, and that's the more heavily game oriented versus the community oriented one, or communication heavily oriented one, is that the average revenue per user for Yalla is much, much higher than Yalla Ludo, or the game one, where Yalla Ludo is well under $1, whereas Yalla is somewhere between $25 and $35 in average revenue per user, which is incredible. Like that's a lot of money that's a lot of virtual gifts and fancy cars that you're showing up in your voice only video chats, or excuse me, your voice only chats in these conference rooms. So that's a lot of money for the average paying user to be spending. And when you look at this, even though Yalla Ludo is growing so much faster, because it monetizes at such a lower rate, it's really just Yalla that's driving the value here. But this also does create some concerns. Like, despite seeing this growth, there are some concerns that I get just sort of thinking about it, like as I start parsing through it, which is that, like, you go back and they launched the Arabic version of Yalla, and keep in mind that's what they're targeting. That's over 50% of their users. They launched the Arabic version of Yalla in April 2016, so about 4 years ago. And it grew since then to 4.8 million monthly active users. But then management also talks about the opportunity, saying, look, there are 137 million active online social networking and entertainment users in MENA. So there's this huge market of people that are already using smartphones, over 137 million people in the markets that they primarily operate in. So in 4 years, they've captured 3 to 4% of that market, and it's not even exclusive. It's like partly captured that. So teeny tiny sliver of the potential. Now an optimist would spin this as like, well, wait a second, 3 to 4%. The 4.8 million monthly active users. I'm just focusing on Yalla now. Like, I recognize Yalla Ludo definitely does change the figures, but most of their revenue comes from Yalla, so that's what I'm focused on. And so I'm looking at this and I'm thinking, like, the optimist would spin this as like, there's just incredible opportunity here. But I think it's important to be a realist, and I try to be a realistic, or an optimistic realist. That's what John Wooden would advise. And when I'm seeing this, I'm thinking this probably doesn't have 10x potential. Just given that you operate in the market for 4 years and you only get 3 to 4% market share. Now, admittedly, Yalla Ludo is growing much faster, but given the monetization rate, I'm not really sure I'm going to focus on that. It's literally multiples difference, 60 cents versus 26 bucks in the most recent quarter. So I think in terms of my checklist, like, does this have 10x potential? I'm probably going to pass on this. Like, it probably fails that criteria. We'll get more into that why in a second, but maybe they have an unrivaled value proposition. Does Yalla have an unrivaled value proposition because they're growing real quick? And I'd say no. Like, they have a small market share, which reflects really tough competition for viewers' attention. For the, those anyone with that smartphone, they're using it, they're staring at their screens, and they've only captured, let's say, 3 to 4%. And you can see like popular messenger apps, the top social network apps here. And the reality is the lowest one in each of these charts, and this is for Saudi Arabia alone, is more than what you were looking at for just Yalla, which, it is saying something. Like, here it is, these things are just crushing it. This is really what's getting people's attention. This is like, yeah, you can spin yourself as a voice-centric app that is focused on local markets, but like, actually, what's capturing the most eyeballs? What's capturing most people's attention? Like, do people actually prefer doing voice only, or do they prefer WhatsApp? And clearly, like, the numbers say WhatsApp by far. So I would say, like, yeah, it's sort of this specialty company, but yeah, you don't have an unrivaled value proposition. Well, wait a second. What about Yalla Ludo? They're heavily game focused app, and when you look, once again, I chose Saudi Arabia as one of the countries to focus on, because that's one of the target countries in their markets, in their market, and you can see it's not even in the top 3 based on some of the games, where Player Unknown Battleground is number 1. You have a competitor live stream, live video, live chat app as number 2. So that's ahead of you as Yalla Ludo. You have another live video broadcast and streaming chats also ahead of you. You have Tango. So when I see that these other players are ahead of you and you only have 3 to 4% market share, it makes me a little nervous. Like, yeah, you're probably not crushing it. You're probably facing really tough competition. Okay, so no unrivaled value proposition, probably now 10x potential. Are there any other complications with Yalla? And actually, another big complication, and I'm going to cover this again when I review another company that also recently IPO'd that's growing super duper quickly. And the complication here is ownership, where in summary, and you can see this table here, it's a little blurry because that's the best version I could get from their financial filing. But in summary, like, if you trace it around, so you have Yalla Technology FZ LLC, which is a Dubai headquartered company. It's legally based in the British Virgin or the Cayman Islands, but it's owned, now going to the right side of the chart to the bottom, it's owned by Chinese subsidiaries. So you have this Dubai headquartered company legally in the Cayman Islands, owned by Chinese subsidiaries, making apps for the Middle East and North Africa, listed on the New York Stock Exchange. That in itself, like, while it's complicated, the challenge isn't the legal structure, because there are plenty of Chinese-oriented companies or Chinese-owned companies that have structures like this in order to trade on the New York Stock Exchange. So that in and of itself isn't the problem or the challenge in my mind. The challenge in my mind is that this means that you can't be 100% certain about the data. And that means all these conversations, the data, might be going through servers that are in China, in which case, the Chinese Communist Party can review any of these so-called private conversations between people in the Middle East. And so I would say that's potentially a blow-up risk for the company if any of these countries sort of wisen up. And I suspect this will happen in the years or decades ahead, where countries start saying, wait a second, where is this data flowing? Where does all this go? Because there are all these private conversations or seemingly private conversations that in reality, the governments of, let's say in this case, China, can be reviewing whatever's being said. And this is sort of polar opposites of, Facebook, which is making more of a push to encrypt all these conversations. And so here it is, this strikes me as just super interesting, just from a blow up risk perspective of, could you start having these countries say like, oh man, like the Chinese Communist Party can be listening in on what we thought were private group chats on this thing. So I've talked about like the value proposition, the 10x potential. I talked about what their business does, but what about valuation? Like, is the valuation actually cheap enough to warrant, getting excited about it? And that's my value proposition to you, is that I make, this calculator for you to play around with. You click on the description in the video, you click on it, you file, download it, and then you can change the assumptions yourself to see what's the upside downside here. And what's interesting is, so first of all, they were going to IPO at $8. It came in below that, and they raised a little bit more capital below $8 a share. So it shows like this was an IPO that sort of people didn't like. It was sort of a neglected IPO. It didn't really get people, frothing at the mouth, unlike a snowflake where it's, gone, straight up a couple 100%. But the question is, even though, it doesn't have the things I'm looking for, could it still offer a good, investment for people that want to consider these sorts of things? And so what's interesting is, so let's do work from the top down. So right now it's around $8 a share, which implies around $1.2 billion market cap. They did around 64 million revenue in 2019. They're on track to do, around 109, 120 million revenue in 2020. So you can see like directionally very, very fast growth that I'm ballparking for 2020. And this is hypothetical. And keep in mind, whatever conclusions I come up with here, you can see what's the data that's driving it. So you're welcome to change these assumptions because, of course, this is hypothetical. It could go way higher, way lower. I'm just working from a basic framework. Their optimized margins are incredibly high. This is their operating margin. That's 45 to 50%. And then their tax rate, because their Cayman Islands focus and operate, their Cayman Islands owner legal structure, Chinese ownership, operating in the Middle East, their tax rate's really low, single digits. That could be reversed at some point. So that's another partial blow up risk where the Chinese government may say, hey, we actually want 15, 25% cut in time. I'm putting in what they're currently paying, which is sub 2%. And so you can see for a company that's growing, 100% in the first half 2020, they're actually trading at a very interesting or very cheap valuation. If you were looking at any other software company that had these sort of metrics, like the valuation could easily be 3 to 5x higher, just based on their metrics of growth and profitability. So that gives you like the potential, for how to think about this. So then how do you think about, the years ahead? Because I'm not able to underwrite, an unrivaled value proposition, it's hard for me to confidently say like, yeah, you're absolutely going to grow. And so it's weird for me to pencil out like, yeah, I think there's a chance that you actually decline by 5% a year in the next 5 years. But that's me trying to be conservative and say, hey, let's throw out a range of scenarios of what this business looks like in 5 years, where in one case, you're at 84 million in revenue, and another you're at 303 million in revenue, where you're compounding at 20% a year. Neither of those are actually like, it's not a dramatic assumption relative to where 2020 is going to end up. This is saying that it's either going to end up at 80% of 2020 revenue, potential revenue. This is hypothetical that I'm penciling out, or it's going to end up at like 2.5 times 2020. So it's not crazy growth. And the base case is 10%. And so, so then you see, I slap on some sort of multiples because, if you're in the low side, maybe 5 years from now, people are like, you know what, this business is stagnant. They're just going to return cash to shareholders, and it's, it's just a cash cow, but it's steadily declining. It's an ice cube. It's a melting ice cube. So let's throw 10 times multiple on it. So you can see 70% downside. I do 15 times on the mid case, 20 times on the high side, and you can see like that range. But there's a big component that is missing that I usually don't do in these sorts of analyses, because oftentimes for the optimized margins, these companies are wildly unprofitable. But if you have a company that's wildly profitable, you need to factor in the cash generation when you're thinking about it, as well as the existing cash balance. So the cash on the balance sheet, that's a pro forma figure for their IPO. I'm penciling out around 190 million. You can change that figure yourself. And then the subsequent cash is the cash that they're generating over the next 5 years, the investment period. And so what's interesting is when you layer in that additional cash, that's an extra $400 to $700 million in potential value. I'm averaging what's their net earnings in 5 years from now versus what I'm penciling out for this year. Let's say you average out over 5 years. And then the downside, if you say the business value plus the cash, you add those together versus the current market cap, well, then the hypothetical downside in over the next 5 years is like 36, 37%, whereas the upside is 200%. And from a risk reward perspective, that's actually like not bad. That's kind of interesting. And so I could definitely like make the case for several folks that if you, for example, live in the Middle East and you know about the app and you're like, yes, this I see hands-on, I know the people that use this makes sense, I think this business has legs, like you could have a unique insight there to say, you know what, this is probably worth owning. That would be your insight. I don't know enough about the company. I'm seeing this data here and I'm sort of getting mixed feelings. Like, yeah, you don't have this unrivaled value proposition. Yeah, you probably don't have 10x potential. Doesn't meet my criteria. And those are the key filters. This wipes out 95% of the investment universe for a reason. That's okay. But it could still be a multi-bagger in the years ahead because of, I would argue, its very reasonable valuation and its significant cash flow. So this is not going to be part of my journey. If you want to see what is part of my journey, you go to unrivaledinvesting.com, click on journey. You can see what I buy, what I sell, what I hold, and why. You can't take these shares away from me. Exclusive content. I'm creating an educational series just for Journey subscribers, as well as I'm aiming each month to find, so this is my goal, to find one potential multi-bagger each month. Now I'm not saying, hey, this is definitively going to be a multi-bagger. What I'm saying is, hey, here's something like Yalla, where you do have this 200% potential over the next 5 years. Maybe your risk profile would find it to be interesting, where it's, hey, this could potentially have a couple 100%. And for example, in one of my most recent videos, exclusive videos for Journey subscribers, I talk about a security that has the potential to go up 10x in the next 5 years. So, and one last element is that just finding one multi-bagger can change your personal life journey. So if you're interested in following my journey as I try to find these multi-baggers, I'm trying to make it easier for you to try to find these multi-baggers, go to unrivaledinvesting.com, click on journey. And if you enjoyed this video learning about Yalla, make sure you subscribe and hit that thumbs up button. Thank you so much for watching.